Welcome to our Friday market update. My name is Jill Bester. I am an associate portfolio manager with Genesis Capital Management, and I'm joined here this afternoon with our Chief Investment Officer and CEO, Wayne Wachell. Good afternoon, Wayne.
Hi.
What a week we've had. Share with us what we've seen in the market this week.
Well, this week the market went sideways, but there was a lot of internal rotations, and I would say the risk-on trade is still there. The economic cyclical stocks did better than the tech companies. Energy, financials all did well, as did the commodities. And it was that kind of a week where more risk-on small cap did well as well. And for the week, it's still more of a risk-on environment, discounting the positive news from the vaccine of last week.
Right. That's interesting and exciting news with the vaccine announcements. I see this afternoon the FDA is looking into the approval of the Pfizer vaccine. They're going to make their decision, looks like, around December 10th. So with that news, I expect we're going to see continued rotation within the market until they get that approval through. What are your thoughts?
There's good news out there. It's always, they say, it's always darkest before the dawn. And with the current spike in COVID, are some concerns, but generally the market is discounting a recovery in the overall market next year, and also the coming advent of vaccines. And so we've seen a big pop in the value trade, those beat up companies that were hurt by COVID, and growth slowed down and actually come off a bit. And there's going to be that kind of volatility, I think, until we get more visibility through this whole current outbreak here. But longer term into next year, we see the value stocks doing a bit better and the smaller caps doing a bit better. More of a risk-on type environment. It's a longer term play with volatility along the way, and that's just the way it is. But I think the market is discounting a recovery and a vaccine coming to bear on the economy and the population.
Right. So what kind of changes have we made to the portfolio based on this movement we're seeing between the dividend, which would be kind of the COVID losers, and then the Can Globe fund with our COVID winners over concentrated in the growth?
Well, we made some changes in two ways. Number one, we've actually purchased more of the dividend strategy with our balanced mandates, took it from cash, put it into there. And we also, with our Can Globe fund, which is more of a growthy fund, we did some rotation out of technology into the more economic sensitive areas like financials, industrials, and some materials. So some rotation there. We're getting ready for longer term, we think, improvement in the economy and some of these areas as we push through this pandemic.
Right. We also saw, obviously, Mr. Ford in Ontario make the call this afternoon in regards to a lockdown of Toronto and Peel. With that news, obviously that's going to have major impact on small business, and they're doing additional, funding, federal and provincial funding. With that, though, that's going to increase our deficit long term, and obviously with a little bit of inflation, pressure that we're seeing, the consumer price index rose this week based on the cost of food. How do you forecast that we're going to actually see through this after the pandemic has come to a manageable position?
Well, this is like going through a war in some ways, and to fight that war, the government's spending a lot of money, as they do in most other wars. And it'll take a long time to pay the debt off. Taxes will probably go up somewhat, but you never solve your problems with taxation. We're going to have to grow our way out of this problem. And that's usually what happens. It means sort of buckling our belts, tightening our belts, and growing the economy, and longer term getting the ratio of debt to the economy down by growth and not and less spending. So it's going to be a long-term proposition, but that's what happens during these kinds of events.
Right. We call our Canadian dollar the petrocurrency, obviously, based on our overweight in the energy sector and the TSX. Where do you forecast, if you can forecast this based on the slowing potentially of the economy, where oil will sit long term? We're over $42 a barrel still, but with the slowdown potentially based on lockdowns, where do you think long term we're going to look to see where the oil lands?
Well, I still think the pandemic has changed the game completely in terms of travel, business travel. Folks are going to spend more time working at home using Zoom to go into work. I think there'll be less business travel because of the advent of Zoom and how we've changed our practices. So there's the demand for oil has definitely peaked, and that's what we're seeing some forecasters out there saying. And so I think it's going to put a lid on oil. During tight spots, oil could spike up to maybe $60 in this range here. But I think longer term, if you look at the futures 4 or 5 years out, they're $45 to $47 in that range. So I think that this pandemic has changed the game for energy longer term. And there's also just more technology out there as well. That's renewables that are changing demand as well for oil. So I think it's longer term. It's less optimistic for oil than it was before the pandemic.
Right. And with that, I actually had a client pose a question. Where is the Canadian dollar to US dollar, do you think is going to go over the next short term?
Well, typically when the global economy improves, it's more of a risk-on environment and international trade improves. Canada does better in that kind of environment, I would say. And the oil makes depends what happens with the oil, but oil should do well this year, reasonably well this year as the economy improves. So we see some strength into next year. Uh, I'm not sure how far it can go, maybe to 80 cents if that, but it should do a bit better into next year. There might be some chop along the way through this COVID spike here, but through next year it should do okay.
Right. Are we currently positioned at holding Pfizer and Moderna and quite a large healthcare sector waiting still?
We were overweight those. We overweight that sector. We went overweight. We're still overweight in that sector, and it didn't have a great week because Amazon came out this week with an idea of actually starting to sell drugs, and that definitely hurt a lot of the drug companies. And so they're also going to get squeezed, we think, through some of the new proposals we're seeing in the U.S. healthcare industry.
Right.
But we have an overweight in that sector. We don't have much Pfizer. We have some Merck, Regeneron, but generally we overweight that space.
Right. On that note, obviously, Dr. Bonnie Henry has put down further restrictions across the province, not just in the Lower Mainland and Fraser Valley. So with that, I'd like to wish everyone well. Obviously, it's a time of great concern for many of us. And at this point, I think we'll call it a day. Wayne, thank you again for your time. And we'd like to thank you as our customers as well as our prospects. If you have any questions, please feel free to reach out to your portfolio manager. Thank you very much and stay safe all. Thank you, Wayne.